I'm Paul Jay in Washington, D.C. Joining us now from Amherst, Massachusetts, is Bill Black. William K. Black is Associate Professor of Economics and Law at the University of Missouri, Kansas City. He's a former financial regulator, and he wrote a book in 2005 titled "The Best Way to Rob a Bank is to Own One." Thanks for joining us, Bill.
Thank you.
And Bill, maybe a sequel to your book could be "The Best Way to Rob the People of the Earth is to Own a Bank and Control a Government."
That is the key.
In your book and in recent interviews, you've talked about the current financial crisis as being one of a deliberate fraud, not just some systemic anomaly or mistakes. Talk a bit about why you say this is deliberate, conscious fraud.
Well, first, because the FBI has long said that that's what it is. The FBI began publicly warning in September 2004 that there was an epidemic of mortgage fraud, and predicting that it would cause a financial crisis if it were not contained. And obviously it was not contained. The FBI also has numbers out on this. There are over 63,000 criminal referrals per year for mortgage fraud, and only regulated entities file those criminal referrals, and regulated entities only made 1/5 of the non-prime loans. So you have to multiply times 5. That's over 300,000 already. But you could only do that if we spotted all the frauds in the regulated entities, and if the regulated entities consistently made criminal referrals as they're required to by law. But of course, if the fraud is going on at the senior levels, you're kind of reluctant to make criminal referrals. So in fact, the true number of these mortgage frauds appears to be, at a barest minimum, 500,000 a year, and more likely 1 million per year. We also know from people that have looked at samples of these loans that back up the toxic financial derivatives, these things called CDOs, collateralized debt obligations, that they find nearly universal fraud in those underlying mortgages.
And these are mortgages that were given AAA ratings by the rating agencies.
It was these CDOs that were given AAA ratings. That's supposed to mean that they have next to no credit risk. And in fact, these are the things that are suffering 60 to 85 cents on the dollar losses. And most critically, we know from the FBI that 80% of the fraud losses occur when lender personnel are involved. So these are frauds coming from the lenders overwhelmingly, not the borrowers. And indeed, that understates the problem with the lenders, because the only reason the other 20%, the frauds induced by borrowers, are possible is because the lenders deliberately gutted the underwriting standards, because the way you optimize accounting control fraud is to deliberately make bad loans. And when you gut your underwriting, you have absolutely no protection against fraud by outsiders either. And so that's what's happened.
So if I understand it correctly, in the boardrooms of some of the biggest New York and global investment banks, leaders of these companies sat down and deliberately decided to create these packages of mortgages. They knew that someone in California borrowing money to buy this house would never be able to pay, but they knew if they packaged these all together and resold them to their client investors, they would make killings in their bonuses, and they would create layer on layer of investment packages that got more and more complex, and that it's a very deliberate scheme. And if I understand you correctly, the reason it's a fraud is because they know someday this is all going to crash, but they're going to have cashed out before the crash, and they're, I guess, expecting the government to come in and bail them out when it happens. Have I more or less understood your argument?
Well, you don't even have to bail them out. Even if they're not bailed out, the senior officers walk away rich. So the failure of the firm is not a failure of the fraud scheme. And to quote Nobel Prize winner in economics, George Akerlof, who wrote with Paul Romer in 1993 about this kind of fraud scheme in the savings and loan debacle, this kind of accounting fraud is a sure thing. And that's the point. It's a 4-part recipe. And if you listen to this recipe and then you apply it to the facts, you'll see It describes exactly what went on in this crisis as well. But not just this crisis, in the savings and loan crisis and Enron and WorldCom as well. Here it is. Grow like crazy. Exceptional growth rate. Second, make deliberately bad loans that aren't going to be repaid because you can charge a higher interest rate for those. Third, have extraordinary leverage. That means you borrow a lot and have very little capital. And fourth, and this one makes it fraud all by itself, don't put on loss reserves in your accounting books. And that means it shows up as massive profit. If you appropriately created loss reserves for the losses inherent in making this kind of loans, you would have had to show, of course, as a lender that you were losing money every time you made these loans. And obviously that wouldn't have been good for business. So instead, loss reserves fell to all-time record lows even as they made these massive bad loans. And that's why we have the catastrophic losses we do.
Now, just for the sake of our viewers, on our web page, you will find some previous interviews with Bill Black. You'll be able to get much more detail of how this whole, what he describes as systemic Ponzi scheme worked. So I invite you to read those interviews. We're going to push ahead now to today. And William, tell me, has anything changed? Have we seen either any level of accountability for the people that committed this systemic fraud, or is there any actual real legislation that will be passed that will stop this all from happening again?
Things have changed, and they've changed overwhelmingly for the worse. One of the reforms that we have in place after the savings and loan crisis was specifically designed to stop some of the perverse things that are going on now. In particular, there's something called the Prompt Corrective Action Law that mandated that the regulators shut down these insolvent banks so that they couldn't be bailed out by the public. That law has been systematically evaded and violated by first the Bush administration and now the Obama administration. In particular, the banks had the political juice to go to Congress and to get Congress to extort the Accounting Standards Board, which is called FASB, to change the rules so that the banks no longer have to recognize the losses on these toxic loans they make unless and until they actually sell them. That means that they don't have to recognize currently over $1 trillion in losses. So think, if they had to recognize over $1 trillion in losses, what would happen to all these reported profits? And you can't pay the bonuses without the reported profits. So this has been done for the sole purpose of allowing us to pretend that there's been a huge recovery in the banks and to allow the banks to pay these bonuses that President Obama has said are outrageous. Well, they are outrageous, but they are possible only because the rules were gimmicked for the benefit of the bankers. And by the way, the person who gave the wink and the nod that this was something that should be done is Ben Bernanke, who the administration just used its political capital to reappoint to be chairman of the Federal Reserve. And before that, of course, he'd been a disastrous failure as a regulator and one of the architects of this crisis. So no, we have negative accountability. If you were an important contributor to this crisis, you were promoted and reappointed and given massive bonuses.
As opposed to being arrested.
That's correct. There has not been a single arrest, a single indictment, a single conviction of one of the senior insiders at these major non-prime lenders. None. And in the savings and loan crisis, we got over 1,000 what were referred to by the Justice Department as priority felony convictions of senior insiders. It's as if You took your kids.
Welcome back to the Real News Network. We're joined again by William K. Black. He's joining us from Amherst, Massachusetts, and he's at the Perry Institute today. And he's the author of the book, Best Way to Rob a Bank is to Own One. And we've been talking to Bill in the first segment of the interview about the current financial crisis and what he calls control fraud, which is fraud controlled from the highest levels of financial institutions and the government. Thanks for joining us again, Bill.
Thank you.
When President Obama sold the bank bailout to the nation, and President Bush said more or less the same thing before him, they're doing this for Main Street, not for Wall Street, that we need this financial sector to work. We need credit. We need a financial system that doesn't collapse on us. So was there any choice? You described in the first segment that these institutions are essentially now run by psychopaths, but was there a choice?
Yes, all of these institutions were insolvent on a market value basis without the government bailout and were in imminent liquidity crises. The United States government had leverage that is never had in the history of the Republic. And it could have produced any of the reforms out of that leverage that it needed. And finance desperately needs reform. Finance has grown from about 5% of the profits of America to about 40% of the profits of America. It is a huge parasite. Instead of the theory, which is that it's supposed to help Main Street, think of it as a giant engorged leech on Main Street. And it has made Main Street far more sluggish. And it, by the way, it doesn't just take money out of Main Street, it takes it out of the poorer parts of America and it transfers it to the richest parts of America. So finance is largely responsible for the massive growth in inequality. And it means that even when our economy is supposedly performing, like last decade before the crash, in fact, middle-class Americans were no better off at the end than they were at the beginning, after a full cycle of recovery. And that's the first time in U.S. history. And so when the market supposedly is working well, it's bad for Americans. And when the market goes and takes us into its latest crisis, and it is set up now to bring us from one crisis to another, then it is horrific for America. So finance desperately needs to be tamed.
And there was an opportunity, you're saying, to deal with this leech in a more fundamental way. But first there had to be an acknowledgement on the part of the Obama administration that there needed fundamental change in the finance system. But that doesn't seem to be what we've seen.
Well, you didn't. And the Obama administration, we knew from the beginning, was going to be, at best, very poor on finance. And it's because it chose as its leadership Larry Summers and Geithner. Well, Larry Summers was an architect of the deregulation under the Clinton years. This is a protege of Rubin, Goldman Sachs, that helped produce this disaster. Now, that was a bipartisan effort. Phil Gramm was also a leader, but the Clinton administration was a major contributor to this problem, and Larry Summers was a big part of it. Geithner was a completely failed regulator. He was supposed to regulate most of the largest bank holding companies in America because he was president of the Federal Reserve Bank of New York. He never saw the crisis coming. He gave no warning of the crisis. He took no effective regulatory steps. And as a result of him being a complete failure, we promoted him and made him Treasury Secretary. Bernanke had been a complete failure, so we reappointed him. And Bernanke just appointed Patrick Parkinson to be in charge of all examination and supervision at the Federal Reserve. This was in late fall of last year. Well, who is Patrick Parkinson? No one's heard of him, obviously, any more than they've heard of Bill Black. But Patrick Parkinson was the person that Alan Greenspan used to lead the charge against Brooksley Born in 2000 and in 1999 when she wanted to regulate credit default swaps, which is what blew up AIG and is where we bailed out Goldman Sachs. And Patrick Parkinson said we shouldn't have any authority at all to regulate credit default swaps to protect the public because there's no risk of fraud here. And by the way, these credit default swaps get credit rating agencies. These are the same credit rating agencies that gave AAA rating to stuff that was known in the trade as liar's loans. So we have the wrecking crew, what Tom Frank aptly called the wrecking crew, what Jamie Galbraith aptly called the predator state. And what did the Obama administration do with a wrecking crew that had just destroyed much of the global economy? He promoted it and praised it. It's the most staggering thing for someone who identified as a progressive candidate in the history of this nation.
What you would have hoped to have seen a Brooksley Born somewhere in Treasury at someone like that at those levels to clean up this mess.
Yeah, I have this novel idea that you should promote the people that are right and get rid of the people who are consistently wrong.
Well, one of the arguments they might give you, they being people that support the Obama's policies on this, and I don't think they would say this on camera, but off camera they might, which is the fraud and corruption is so systemic that you would have to undo the whole fundamental relationship between government and the finance sector and have a much, for example, you'd have to have some kind of public option, as they were talking about in healthcare, but in the finance sector. And that to do that would have caused such disorder, they say, and I've had people tell me this, that the financial meltdown would have been more profound, millions more unemployed and such. So they had to go this way. What do you make of that?
They actually tell you that?
Yeah, they tell me that.
I've never had anyone with the gall to say that. That's extraordinary. I mean, when I describe the current crisis and its causes to people who are Indonesians of, say, 50 or years or older, they have no trouble at all understanding modern America because it looks just like Suharto. It's crony capitalism. And what you've just described is people saying, our system is so embedded in crony capitalism now that if we interfere with it, there'll be a crisis. Well, if you don't interfere with it, you will have repeated, intensifying crises because that is the nature of the beast of crony capitalism. So you better fix it now. If you leave it, you are giving a bequest to all our kids and our grandkids that is going to turn America into Indonesia under Suharto.
Well, in the next segment of our interview, let's talk about the next shoes to drop. You mentioned in the first segment of the interview something like $1 trillion of bad assets that are not being shown on the books to make the profit look better. In the next segment, I'm going to ask you, someday the real losses have to be accounted for, and more than that. So in the next segment of our interview, let's explore what comes next with Bill Black on the Real News Network. Welcome back to the Real News Network. I'm Paul Jay in Washington, D.C. And joining us now from Amherst, Massachusetts is William K. Black. He's an associate professor of economics and law at the University of Missouri, Kansas City. He's a former financial regulator, has a doctorate in criminology and white-collar crime, and he's the author of the book, The Best Way to Rob a Bank is to Own One. Thanks for joining us again, Bill.
Thank you.
Let's pick up on the last segment of the interview and talk about what might come next. So, first of all, describe the nature of the continuing problem in terms of the hiding of losses, and to what extent has this been covered up by throwing money at it, and that we're going to see a bigger continuation of this crisis?
It's overwhelmingly been covered up not by throwing money at it, which means it's still out there festering, but by simply refusing to acknowledge that the losses exist by gimmicking the accounting rules, which, by the way, was done at the start of the savings and loan crisis and helped turn that into a debacle. So one of the things we cleaned up as regulators in the savings and loan crisis was the accounting to stop these accounting scams. Well, instead of learning the right lessons from the prior crises, we're doing just what Japan did, which is to cover up the losses. And that produced what is called the lost decade in Japan, but is really now the two lost decades. Because markets can't recover if you lie about asset quality. So that's the fundamental thing we did, and it was from pure political power and intimidation of the accounting profession. And that's an outrage.
We know under the Bush administration there was a major shift of resources within the FBI from white-collar crime to investigating potential terrorism. Has anything changed under the Obama administration?
No, and that's really disappointing, because one of the very good things that this, at the time, not particularly well-known senator from Illinois did was propose legislation to increase the number of FBI agents. Now, that was, of course, Senator Obama of Illinois. So as president, he could get this done without any new real legislation. Just, he controls the Office of Management and Budget. We could put in the budget, and then, what Republican is going to vote against having more FBI agents? This is something that a year in hasn't been improved. So if you look, this is really astonishing, but the numbers from the Justice Department show that it's true. We have less than 1/6 the resources of FBI agents and prosecutors working this epidemic of fraud than we had working the savings and loan crisis. This crisis is at least 30 times greater than the savings and loan crisis, and we have less than 1/6 the resources. It's no accident that there are no even indictments, much less convictions, of the senior insiders who drove these liars' loans. We are doing nothing to deter future crises. We're doing nothing to have accountability.
Now, what about the legislation that's in front of Congress now? Is there anything there that would stop all this or undo all this?
It's not in the administration bill. That's incredible, right? The administration bill, this is something that Senator Obama got correct, but President Obama has largely forgotten. It is being pushed right now by Marcy Kaptur, has a bill to hire 1,000 FBI agents to work on white-collar crime. And I hope that your viewers will support that effort by indicating their support for the Kaptur bill. But remember, this is just one portion of this crisis. There are so many shoes yet to fall, it's going to be like being in Imelda Marcos's closet during an earthquake.
What do you make of the legislation before the various finance committees, Barney Frank's committee? Is there anything in the other kinds of financial regulations that they're talking about trying to stop proprietary trading, where Goldman Sachs type companies make their own direct investments, not just on behalf of clients? There was some talk of a regulation where banks would actually have to put the interests of their clients ahead of their own profit making. Does any of this look real or effective?
There's very little that has survived that's meaningful in the administration bill. So we talked about the fact that there was nothing in it effective for criminal justice answer. The big thing that was in it was the Consumer Protection Bill, and the Senate is seeking to make a mockery of that. This is again this insanity of bipartisanship as the Senate and the Obama administration view it. So the supposed bipartisan compromise was first to put the Consumer Protection Bill in the Treasury which hates consumers and loves bankers, and where it wouldn't be an independent agency at all. Now that lasted all of one day, not because it was a terrible substantive idea, but because the politics changed. And the Republicans demanded the next day Treasury wasn't bad enough for them. They insisted that the agency, which would no longer be an agency, just be a bureau, be put within the Federal Reserve. You know, somebody there has a really malicious sense of humor, because this is such a sick joke. Because the only entity in government that hates consumers and loves banks more than the Treasury is the Federal Reserve. So the idea that the Federal Reserve, which has always refused to protect consumers, would suddenly be the advocates for consumers would be hilarious if it weren't so nasty.
Talk a bit about the role of the Republicans in this debate. They get to appear as if they're the critics and not part of all of this.
Well, yes, and they get here, it's brilliant. They get to appear and take credit for passing legislation to protect consumers. And, you know, some consumers might actually believe that and reward them with their votes, but everybody in the industry is laughing uproariously, thinking what a brilliant way to destroy consumer protection. And so the industry will reward all the people that propose and support this compromise with huge political contributions. It is the greatest win-win. Of course, it's just completely terrible public policy and completely cynical.
Well, in the next segment of our interview, what would Bill Black say to Barack Obama if he ever asked? Please join us on the Real News Network with William Black. Welcome back to the Real News Network. We're joined again by William K. Black from Amherst, Massachusetts. He's at the Perry Institute, and he's a professor of economics and law at the University of Missouri, Kansas City. He's a former financial regulator, white-collar criminologist, author of the book, The Best Way to Rob a Bank is to Own One. Thanks for joining us again, Bill.
Thank you.
So if you got, I would guess, a surprising phone call from President Obama, and he asked you, okay, enough, Bill, what should I do? Enough of this criticism. What would you tell him?
Well, first, you know, they did have me do a campaign video for them.
Them being the Obama campaign.
Attacking Senator McCain's role in the Keating Five and his failure to learn the appropriate lessons. But ever since they've gotten elected, they haven't called me or anyone like me, because I've checked, who actually was part of the successful re-regulation of an industry in crisis, which you might think would be a relevant skill set. Nor have any of these people been appointed.
Bill, in that, just for our viewers, you're talking about the savings and loans crisis in the early 80s.
That's correct. So that was, you know, a real-world experience from which lots of important and painful lessons were learned, and they aren't interested in it at all because they're not interested in a real substantive re-regulation of this industry. They want to paper it over and declare success, you know, and go on. I have recently put on, in an interview on the web, the top 10 priorities that I would do. So your listeners can take a look at those. But the types of things that you need to do are as follows. And you can do most of these in parallel. In other words, you can do them simultaneously. You have to fix the too big to fail problem. These are systemically dangerous institutions where what the administration is telling us is if a single one of them fails, they will produce a global crisis. And the way they're handling them maximizes the risk that they will, in fact, fail. So here are the things we should do on systemically dangerous institutions. A, don't let them grow anymore. Because right now, and this is truly insane, we're saying that these institutions that are already massively dangerous because they're so big should get bigger. That's crazed. B, shrink them. Give them the mandatory incentives through taxation and regulation where they have to think of the most rational way to shrink rapidly. C, in the interim, regulate them far more intensively and make them recognize their losses. Segues into the second thing you need to do. Stop lying about assets quality. Make them recognize their losses. Change the accounting rules to be honest again instead of the lying, cheating system that we have now. That fits into the third thing. Executive compensation drives these frauds. It is not tied to performance. It does not align the interests of managers with shareholders. It serves as a device for creating a nearly perfect crime of accounting control fraud. So clean up and dramatically reduce executive compensation. Make sure it is only earned if there is long-term effective performance and that you have clawback provisions if that turns out to have been based on a lie. Fourth, change the regulators. We have Bush's wrecking crew in charge. They don't believe in regulation. And we have Clinton's wrecking crew in charge. Get rid of them. Get rid of Summers. Get rid of Geithner. You can't get rid of Bernanke, but appoint a new chairman, and that will effectively get rid of Bernanke. Get rid of Patrick Parkinson, the head of supervision at the Fed. Get rid of Dugan, the head of the Office of the Comptroller of the Currency. Get rid of the head of the Office of Thrift Supervision. Put in people that believe in substantively re-regulating so that we can fix these problems. And by the way, this is what will allow you to have quick success. Everybody in America now knows exactly how dysfunctional Congress is. If you wait and try to get your re-regulation through changing the law, you're never going to get anywhere with this Congress. And after the midterm elections, that's probably going to be even harder.
So your point here is that this is all things that Obama can do without passing new laws.
That is correct. And this is over a year into the administration. And he has left, in many cases, he's appointed no one, nominated no one. Right? These agencies are twisting slowly in the wind under the leadership of people who were the architects of the disaster, who hate regulation, who don't believe regulation can work. Well, that creates a self-fulfilling prophecy of failure.
What do you make of the argument given in many quarters that the Fed is one of the pillars of the problem and that we need something other than the Fed, for some kind of central bank with a public interest mandate of some sort?
Well, the Fed, of course, is a big part of the problem, but the easiest way to change the Fed is to change who's running the Fed. And there are enough vacancies that Obama could do that and could do it within a short time period and force the Republicans to either filibuster and say that we're not going to allow new appointees to the Fed, just leave them vacant, or push them through, make the Republicans stay and filibuster every night of the year for the next 3 months to prevent any changes in effective regulation. Well, you will have the American people turn on the Republicans at that point if they follow that political strategy. And they will turn with a vengeance. But Obama has to stand for something, in contrast to the Republicans. And right now he doesn't stand for anything. Let me give you a perfect example. President Obama on one day, not very long ago, says he wasn't elected to represent the fat cats, the fat cat bankers. And he says, quite rightly, that the executive bonuses are outrageous. About 2 days later, the Federal Deposit Insurance Corporation, which is through weird accident, is the only effective regulator, Sheila Bair, proposes a rule to restrict executive compensation. That proposed rule only passes on a 3-2 vote because both Treasury representatives, Dugan from the OCC, Bowman from the Office of Thrift Supervision, vote against cleaning up executive compensation 2 days after the President of America said executive compensation had become outrageous and that he would not represent the fat cats but would represent the American people. So who makes financial policy in America? President Obama or Treasury?
Well, it seems like President Obama makes speeches, but the policy coming from his administration seemed to be something else, which leads to a kind of bigger question, which I think we need one more segment if you're game. Is the problem so systemic, and by that I mean not just systemic in terms of the financial sector, but in terms of the Ponzi integration in the Ponzi scheme of the political system, that measures, as you're suggesting, which seem to be so rational and essentially no-brainers, they seem so obvious that they would be done in the short term, the fact that even these measures can't be done, what does it suggest that people watching this should be demanding, and what should they be doing? So in the next segment of our interview, let's talk about the political malaise and what you think people should be doing about it. Please join us for one more segment on The Real News with Bill Black. Welcome back to the Real News Network. I'm Paul Jay in Washington, and joining us again from Amherst, Massachusetts, from the Perry Institute, is Bill Black. William K. Black is a professor at the University of Missouri, Kansas City, and author of the book, Best Way to Rob a Bank is to Own One. Thanks for joining us again, Bill.
Thank you.
So just to sum all this up, let me ask you this. In the very beginning, you called this system parasitic. You said if you want to understand the relationship of Wall Street to Main Street, they are like leeches. Have we gotten to the point where the financial system is so parasitic and the political system, at least at the leadership, at the levels of the leadership of the two main political parties, are so entwined in this parasitism that we really need something else? And what would that something else be? In other words, what ordinary people watching this, what should they be thinking about?
Well, they should be thinking this is crony capitalism, and so a solution can't just look at finance, it has to look at the involvement of finance and government. And this is about to get much worse because of the Supreme Court decision that it now says that corporations are going to be able to do unlimited political contributions because they're really people.
Unlimited advertising.
Limiting political contributions and advertising are going to be authorized under this same logic. And that is going to mean that, for example, the House Finance Committee now has 71 members because both political parties, whenever they have a freshman elected from a tough district, try to get them put on the Finance Committee because they know that if they get there, it's a gold mine guaranteed of political contributions that will increase their chances of re-election. Well, that's sick. So here's a couple of modest proposals. If corporations are really just like people, then we should have a 3 strikes law for corporations. 3 strikes and you're out of business in terms of felonies or violations of the law. By the way, we're not going to have many more major corporations around more than about 15 years if we adopt that standard. How about this one? Minorities in Florida can't vote ever again if they have a felony conviction. their civil rights in political sense are removed. So, you violate the law as a corporation, you can no longer make any ads. You can no longer make any political contributions. Think they'll go for that?
That would end a lot of television channels' revenue streams pretty quickly.
Yeah, that would be terrible, wouldn't it?
So at the level of the political parties, as people become more educated about these issues, and the kind of candidates they might support in the primaries, what should they be looking for in terms of candidates that might actually be willing to take on this parasitism?
This is the fundamental thing. We knew as soon as we saw Summers and Geithner that the finance side of the administration would be a disaster. But we hoped that the political side would be preeminent and say, you know, A, this is substantively wrong to continue to get in bed with finance, and B, it's terrible politics. The Democratic Party will be crushed if it does this. Well, the political side has failed to get involved. So, you know, this is one of those rare things where doing the right thing is really good politics. So support candidates that will actually do the right thing. And if the Obama administration continues this way, it's going to have a record disaster in the midterm elections. There is going to be a massive loss of Democratic seats. My phrase always is, what would it take if the greatest economic catastrophe in 80 years, if an epidemic of fraud by your top elites, if the corruption of your most senior professionals in accounting, law, appraisal, rating agencies isn't enough to make you fundamentally reconsider and say we are headed along a disastrous path, what will it take? Because the next big one will be even worse.
Thanks again for joining us, Bill, and thank you for joining us on the Real News Network. And if you want to help the Real News financial situation, don't forget you can text 85944, just put the word news, and you'll be sending us $5. Thanks again.